Good morning, dear students. We have studied about the different types, different policies of insurance, and so far we have studied about there are different principles of the insurance. So now we are going to study the next topic, that is about the types of insurance. Okay, so there are different types of insurance are there according to different companies, or different legal formalities are there, and based on that there are so many different types of insurances are there. Various types of insurance exist by virtue of practice of insurance companies and the influence of legal enactments controlling the insurance business. Broadly speaking, insurance may be classified as follows. So there are so many different varieties of insurance policies or insurances are there that different companies are doing, and different business or different legal policies are there. So based on that, many different types of insurances are there. Okay, so we are going to study. There are so many different types of insurances, and we are going to study only some most important types of insurances. Okay, so the first one that we have to study, and which we are very much familiar and we know about it, is called as the life insurance. So we know from the beginning or from childhood onwards we are listening to like LIC and all, so Life Insurance Corporation. So LIC is not the only company which is providing the life insurance. There are so many companies are there. But life insurance, we will study now what is the life insurance and what is the purpose of it, and all these type of things we are going to study. Okay, life insurance. Since life itself is uncertain, all individuals try to assure themselves of a certain sum of money in the future to take care of unforeseen events or happening. Individuals in the course of their lives are always exposed to some kinds of risk. So we are one thing in our life which is not certain is our death, So we all know that we all are going to die. So I also will die, you also will die. But when it is to be taken place, that anybody do not know. Even though there are some people, those who are able to predict that their life is there, that in future this will happen, that will happen, everything they say, but they can never say, never guarantee. Any person in the world cannot say that I will die on this particular date and this particular time, So, but everyone knows that we are going to die. So this is a risk, very much a risk factor. So see, like if I am just going in the market, so like this coronavirus is there, so sometimes we may be getting affected by the coronavirus, and sometimes recently we were seeing many cases like that. See, like they are somehow directly, they don't have any symptoms, they don't have any problems, so but also they may be affected by the coronavirus, and some of them are dying. Okay. Or not only coronavirus, like we know that there are many people dying in our country, and many people are there. But that is not only the case, but there are so many road accidents, there are so many other sicknesses are there, so many things are there. So the life of our own life is not a certain thing. So, and see, like if we are everyone has very much importance in our life. There is a value of our life. So we can say that we cannot exactly say that how much is the value of our life. So that depends on the person, so the attachment of us. See, like if for my wife, myself is a very much valuable person. For my son, myself will be a very much valuable person. But for you, it may not be that much valuable, And for another person, for maybe a person from another class or another school, a person whom I am meeting, and for him I may not be a much valuable person. So depending on the relation that a person is having, based on that we can say that how much is the value of a person, We cannot say that any person, we cannot say that he is this much valuable, or his value is like any property. We can say whatever, maybe like a mobile phone. If you can say that a mobile phone is of 12,000 rupees or 15,000 rupees, 20,000 rupees, 50,000 rupees, different values are there. But for a human life, we cannot say the exact value of any person. And the value depends on the person and the relation that we are having to that person. So if it is my father, for me, I cannot say it will be more than 10 crore rupees value will be there. So if my father is lost, and if somebody is giving me 10 crore rupees, then I cannot be happy. So that loss that I am facing is very much huge. So such a way that we cannot say that we cannot say, but when the absence of a person is there, or at the loss of a person, we will be in trouble. See, like if a family and one husband and wife and 2 or 3 children are there, so such a family is there, and the husband is the only head of this family, and husband is the only person who is earning in the family. And if he is meeting with an accident, and if he is unable to earn it, means if he dies, and other members like the wife as well as the children, they don't have any kind of income, and their life will be in trouble. So in order to avoid this type of troubles, or in order to find out, see, like if such kind of a case is there, so in order to make at this time of accident, some kind of help or some kind of support can be given from the life insurance. So for that purpose, people, they take a life insurance policy. The risk may be of an event which is certain, that is death, and that is in that case, what will happen to other members of the family who are dependent on a particular individual's income. The other risk may be living too long, in which an individual may become too old to earn, that is retirement. In this case also, the earning will decline or end. Under such circumstances, individual seeks protection against these risks, and the life insurance companies offers protection against such risk. So another case is that, say, like if one person dies, then the income from that person will be or fully over. So that family members wants to have some money or some income for their life. So for that purpose, this will be there. And if another thing is there, even if the person is not dying, but if the person becomes very much old that he is unable to work, mostly type of retirement. And you see, for example, as we are working in private institutions, we don't get any kind of like pension and so on. You know, so the people, those who are working in the government companies or government job, those who are doing, they have their pension is there, gratuity, PF, all these type of things are there. But for people, those who are working in the private sector, they don't have any kind of such kind of things are not there. So we know that, say, like to some extent we will be able to work up to maybe 60 years, we will be able to work, but after that we will not be able to work. So after that also we need money for our life. So for that purpose, we can save some money. So now, like if you are getting the salary, out of the salary that we are getting, the money that we are having, out of that we are depositing some money. And at the time of happening of this type of like thing, when we become incapable of earning anything, so at that time we can make use of this money as and the insurance companies will be providing us the money for our life ahead. Okay, so a life insurance policy was introduced as a protection against the uncertainty of life, but gradually its scope has widened, and there are various types of insurance policies available to suit the requirement of an individual. For example, disability insurance, health medical insurance, annuity insurance, and life insurance proper. Okay. So earlier there was only kind of life insurance, and the money was given only at the time of death. But now there are so many different varieties of insurances are there. So like a disability insurance, if an accident is taking place and if you become disabled, if we are unable to do, or if you have hands are broken or legs are broken, or anything happens to our life physically, if any kind of problems are there, so in order to solve after that in our life, for supporting our life, we can make use of this type of insurances. Or also there are some kind of medical insurances are there for like our treatment. Say any accident is taking place or any sicknesses are there, so in order to avoid these type of things, and the hospital bills are there, that is very much high. So in order to reduce the amount of this type of risk, we can make use of the life insurance. Okay. Life insurance may be defined as a contract in which the insurer, in consideration of a certain premium, either in a lump sum or by periodical payments, agree to pay to the assured or to the person for whose benefit the policy is taken the assured sum of money on the happening of a specified event contingent on the human life or at the expiry of the certain period. So life insurance policy is a kind of policy, is an agreement made between the insurer and the insured, and the agreement is that we are paying some amount of money. So sometimes we will be like if you are paying 10,000 rupees or 1 lakh rupees at the asset, that is as a total, that is called lump sum. Okay, we are paying once only. You need to pay the money. After that, the entire life or for some period of life, that much life will be insured. Okay, or you will be paying the insured amount like premium amount for a certain period of time, like a monthly or a yearly or quarterly basis. Okay, so you can pay some money maybe like a monthly basis or a yearly basis, half yearly basis, quarterly basis. Anyhow, you will be paying the amount. So they will calculate, and for how many years we are taking the insurance, and what is our age, all these things they will be considering, and how much is the total money that we are going to get. Based on that, they will set the premium amount. Okay, and that amount we will have to pay, and after a certain period. Okay, so mostly it's like some kinds of insurances are there. We will study about the different type of life insurances, but some type of insurance policies are there which is taken for the all throughout the life. Okay, and some policies are taken for some period of time. Okay, maybe for 20 years or 50 years or something like that. Okay, so according to the age of the person, they will calculate the amount of years, some 20, 30 or something like that. And after that, so if any kind of problems take place before this period, then that time we will get the money. And if does not happen, anything does not happen at the end of the period, we will get the money back. So such a way the insurance policy is taken. Okay. Thus, the insurance company undertakes to insure the life of a person in exchange for a sum of money called a premium. This premium may be paid in one lump sum or periodically, that is monthly, quarterly, half yearly or yearly, that we have already discussed. We can pay the money once as a lump sum, full money can be paid at a time, or we can pay the money monthly, quarterly, half yearly or yearly basis. At the same time, the company promises to pay a certain sum of money either on the death of the person or on his attaining his certain age, expiry of a certain period. Thus, the person is sure that a specified amount will be given to him when he attains a certain age, or that his dependents will get the sum in the event of his death. So if we are taking, say, like if I am 30 years of age and I am taking an insurance policy for 30 years. Now, okay, so if I am taking a 30 years policy, at the time I reach 60 years of age, I will get the money. And if I die before that, if I die at the age of 50, so at that time my family members will be getting the money offered. If I am taking an insurance policy of 30 lakh rupees or 20 lakh rupees, and for 30 years if I am taking, so at the completion of the period, when I reach 60 years, I will be getting this 30 lakh rupees. Or before, if I die before that, my family members will be getting this money at that time of the death. Soon after the death, the money will be taken. This agreement or a contract which contains all the terms and conditions is put in writing. Such a document is called the policy. Okay, so this time you have to write, you have to understand this one, you have to study about this. What is a policy? The terms, the conditions of the agreement. The agreement or a contract which contains all the terms and conditions is put in writing, and such a document is called as the policy. So whenever we say we have heard a life insurance policy, so that is the agreement that we are making. So I am making an agreement with the insurance company, and the insurance company is also making an agreement with us that if anything happens, if I die or if 20 years completes, then at that time I will be getting this much amount of money. And there are so many terms and conditions. All these things are written in a printed form. It will be there, and you will be putting the signature, and the company member also, they will be also putting a signature, and one copy will be held with you and one copy will be with the insurance company. So such a way you will be keeping, and this is a proof that we have taken this insurance policy. And when you have to show this proof at the time of death, or at the time of any kind of problems are there, at that time you have to show this to the company, then only we will be getting the benefit. Okay. So the person whose life is insured is called the assured. The name of the person whose insurance is taken in the name of the person, that person's name is called as the assured, and the insurance company is the insurer, and the consideration paid by the assured is the premium. So these terms you have to study. Most of the insurance companies are there, or most of the insurance policies, we use this type of term words. Okay, so that you have to understand. The premium can be paid periodically or in installments. This insurance provides protection to the family at the premature death or gives adequate amount at old age when earning capacities are reduced. The insurance is not only a protection but is a sort of investment because a certain sum is returnable to the insured at the time of death or at the expiry of a certain period. So we can use it as an investment for the time being. For us, after some years, we will be getting this money back. So as an investment, we can make use of it. Life insurance also encourages saving as the amount of premium has to be paid regularly. It thus provides a sense of security to the insured and his dependents. So it is kind of a saving. Okay, so we can make like periodically we are paying monthly or yearly basis. We will be paying some amount of money, and kind of we can say that saving habit is generated, and we have a assurity that at the time of or after this much years we will be getting a money. Okay, it may not be, as I told you, it may not be able to compensate the death of a person, but some money can be received. That is enough. The general principles of insurance discussed in the previous sector apply to the life insurance also, and a few exceptions are there. Okay. So this is about the life insurance policy, and there are some principles that have to be followed in the life insurance policy, which are we studied about the all the principles of insurance, and in that some policies are followed in this life insurance and some are different. So that we will discuss in the next class. Okay, thank you so much.